Good morning, everyone, and thank you very much for joining me. This is the morning market review. My name is Russell Shaw. I'm a senior market specialist at FXCM. Today is Thursday, it's the 9th of June 2022, and my email address is rshaw@fxcm.com. If anybody needs to contact me, that is the email address to use. I'm just going to go ahead and bring up our high risk investment warning. Keep this on screen for a few moments. And, thank you very much for joining this morning. It's highly appreciated. And our market commentaries disclaimer. Hey Katie, good morning to you. Very good to see you on the webinar. Thank you very much for joining, and thank you again to everyone who's joined so early in the morning. Here's our references: MarketScope 2.0 and tradingview.com, and then of course I want to go through the news headlines. So we're going to use CNBC for that. CNBC.com. Hey Anna, good morning to you. Nice to have you on the webinar as always. All right, so the CNBC article reads as follows: European markets head for negative open ahead of ECB decision. So today is a big day, right? So the ECB decision is today, and I think that we all need to just listen to what President Lagarde has to say. We want to know what their, I guess how they're preparing the markets for their rate decision. There is a chance for a surprise. Do they introduce a rate hike today? It's unlikely, and the market certainly does not expect it. Again, I think if the ECB had to do that, it's too much of a jolt in a very troubled time in the markets, so to speak. So I don't think that's what they would do. It's certainly not expected, but I do think they prepare us for a July interest rate hike. And my expectations there, because it's the ECB, they're not traditionally a hawkish central bank. I think they will start their hiking cycle off at 25 basis points, and perhaps we get 50 in September. But I think let's, of course, be mindful it is a central bank meeting. Central bank sometimes surprise the market. If you have a position on, just be very aware of the potential risks there. Okay. With that all said and done, let's go through the article. European stocks are expected to open lower ahead of the latest interest rate decision from the European Central Bank on Tuesday. European markets will be focused on the forthcoming monetary policy meeting and decision from the ECB on Thursday. The central bank is expected to confirm its intention to raise interest rates next month. The move comes after inflation for the 19-member euro area hit another record high in May. Markets will be waiting for ECB President Christine Lagarde's press conference following the meeting to gauge how aggressively the bank could act. I just want to read that again. This is what we're waiting for. We're waiting to find out how aggressively the bank could act. So that's the unknown. That's what we need an answer for. Asia Pacific stocks were mixed in Thursday's trade, with investors watching for market reaction to China's trade data for May, which performed above expectations. Meanwhile, US stock futures were flat in overnight trading Wednesday after the major averages ended the regular session lower and US Treasury yields rose. So I have in my list here, we will look at the US 10-year. I want to start off actually with the Bund and DAX, and then we'll go into the US 10-year. Investors on Wednesday continue to look for signs of slowing economic growth ahead of May's consumer price index reading, which is slated for Friday. CPI Friday. Okay, the CPI coming Friday. It's the next big piece in this puzzle. We need to just be on top of that. The data is expected to come in slightly below April's numbers and could indicate that inflation has reached its peak. There are no major earnings or data releases for today. All right. All right, so let's go ahead and let's start off with the bund. And it is certainly, I don't remember what this line here was for. I think I'm going to take it out. All right, so a couple of things to note here. Take a look where the stochastic is. Again, really good indicator just to get an idea of underlying momentum. We must acknowledge it's a lagging indicator, okay, because we've applied a slowing factor to it. So at the peaks and the troughs, we're going to be late, but for the bulk of the trend, it's going to give us a good reading of just how strong the momentum is. One thing to note here is we are, I'm on the wrong indicator. I want to come into the RSI. One thing to note here is that the bund is at overbought readings. Okay, one possible interpretation for this, and again, it's very much a hypothesis. There's no definite here, but perhaps the market has priced in a lot of the perceived hawkishness that seems to be manifesting in the ECB. Maybe the press conference today is effectively a buy the rumor, sell the fact type of event. In other words, we may see some sort of, let's just say President Lagarde says they're quite happy to go with 25 next month. Perhaps there's some sort of release for the RSI. But again, once that release, I think, has normalized, once it's manifested, I think that we're in this tightening cycle, right? So the dips here become exceptionally interesting. What we can do is, just before we move onto the DAT, let's take a look at the 2-year, and it's typically the front end of the curve, which moves on central bank decisions. Let's just see what's happening here, and very much the same. So we sit here, okay? So the longer term 10-year, very much a function of investor sentiment, front end, very much a factor of central bank policy. And again, we overbought here. My interpretation for that is, I think that we have been very bullish on very hawkish on ECB, rightfully so. I think that, of course, the ECB must become hawkish. I am of the opinion that there needs to be some sort of normalization. Now, Anna writes something so important, so vital. I think this is a good time to address it. She's saying, I find it difficult. She's finding it difficult, already priced in concept. So I think the best way to explain it, and again, Anna, you'll have to lead me with your questions here, but I think the best way to understand it is actually with just a normal equity, just a normal stock. Let's just say there's a company. Again, I'm just going to choose Apple. We're all aware of Apple. It's just, no advice. Don't take this as advice. It's just sort of, I'm using it for educational explanation. Let's just say, Anna, okay, that there is news let's just say that there is news that Apple has come out with this new super product. It's manufacturing it. It's going to start selling it. Hey, Howard, no worries. Welcome. Nice to have you in the webinar. Apple's got this new product. They're about to sell it. What are you going to do as an investor? Are you going to wait for the sales figures to come out at some stage in the future? Or are you going to position yourself to reap the benefit of those sales before? In other words, the potential is now. The potential is now. Once the numbers come out sometime in the future, well, that's discounted in. We need to position ourselves for the benefit now. Does that make sense? So we start, the markets are forward-looking. We start pricing it in right now. We start pricing in what we expect in the future. And the market's efficient that way. What potentially can happen and does happen, Anna, is that information is often incorrect. So the market is efficient in discounting available information, okay? But often that information has to change. So as the information changes, the market rediscounts. It's constantly discounting new information because new information is constant in the market, but it's always discounting based on forward expectations. Does that make sense? Does that make sense, Anna? It's exactly the same for interest rate policy. If you are a market participant that very much needs to take advantage of interest rates one way or the other, you start positioning yourself. You start positioning yourself prior to it happens. You don't position yourself after it happens. Think about it in terms of taking out a mortgage. Let's say we're in an interest rate hiking environment, which we are. You've got a decision. Do you lock in your current interest rate for a certain period, or are you prepared to keep it on a variable rate? You'd lock it in, theoretically, you'd lock it in now, because this is the cheapest it's going to be for the foreseeable future. You are acting in front of the actual movement. Does that make sense? There's one more explanation I can put in here, but I really just need to know if you're following me there. If anybody is not following me there, just put in no. Okay. So, okay. One more thing that we're going to add here, and then let's just go through the charts. But I want to just put in one more explanation here. Remember, Anna, I know we're not comfortable with mathematics, but I kind of bring it in because I think it's important, and I think we must become comfortable with it. Okay, so again, I'm not going to go hugely into mathematics, but I want to draw in this formula. It's simply the time value formula. I think we've all come across at some stage, probably in sort of high school, but there is a formula like this. That's not right. This is the formula. Okay, so if we want to work out the future value of something, this is our formula. This is our compound interest. Okay. Again, Google this. Go to YouTube. There's fantastic resources on YouTube. But this is effectively our compound interest formula. Okay, this is our compound interest. We're not going to go into any math here, but what I do want to say that in order to get a future value, there's a lot of mechanics that are happening here. So we've got a future value here. So there's a lot of variables. We've got a present value here, and of course we've got this is what I want to show you. We've got N, which is our time. N stands for time. So this is effectively Now, listen to this very, very carefully. So Anna was a language scholar, okay, but I just, again, we're not going to do the maths out. In fact, I want to stick with the language of, I want to stick with the language here, and then we're going to go back to the practicalities of the analysis. So we're compounding, guys. Listen, if you want to work out what your future value is, you put $10 into the account. It's paying 10% on an annual basis, or on a semi-annual basis, or monthly. You want to work out the future value. That's called compounding. That's called compounding. Okay, we're compounding, but there's a different a version of the same formula, and just basic algebra. When you rearrange it, will give you this. Okay, when you bring the present value to the left side, the right side becomes future value divided by y. It's this exact same formula, just rearranged algebraically, right? It's exactly the same formula. It's just, instead of having the future value on the left side, you've got the present value, and all you've done is really you've taken this 1 plus I to the n, you've just crossed it, you've divided the future value by it. It's exactly the same formula. Now, again, just go to the language here. The top part is called, you are compounding. That means you're trying to work out the future value. Okay, exactly the same function, just rearranged, is called discounting. So this is the key, Anna, and this is so important. We compound to get a future value, but we actually want to bring forecasts of the future to the present, and that's called discounting. And that's what pricing in the future expectations mean. If I expect a future value to be X, I'm going to discount that to the present value just by rearranging algebraically. Now, if my forecast for that future value changes, so one of the variable changes, then the whole discounting calculation is going to happen again. Okay, it's going to happen again. So you're going to have a different present value. That's what discounting is. Okay, great. All right. I don't want to do more maths. You know, we started the week heavy. Let's you know, shelve the mathematics. Again, you guys have my email address. I'm very much open to you sending me emails, and I'll reply. 90% of the time I reply. If I don't, it's slipped through the cracks. I apologize. But always check your spam. Always check your spam. By the way, Rob, what did you think of that spreadsheet? Incidentally, did it help? So what we're saying here is that the discounting's happened, Anna. The discounting's happened based on future value. Okay, we're going to get a new future value today after President Lagarde speaks. We must get a new future value because there's new information. Okay, so now it all depends what that information is. Does it increase the present value or does it decrease the present value? Okay, so that's what we mean. Okay, that's effectively what we mean. Now, let's just go to the, let's go through to the, if there's any confusion, guys, you must let me know, hey? Let's go through to our market scope. Okay, cool, Rob. Awesome. Let me know. Let me know. Let's go through the DAX, guys. Let's just get some practical analysis in, because a lot of the stuff we've done is theoretical, which I enjoy and I think is important. But I want to give you guys some sort of practical parts to the webinar, which hopefully I'll be able to do adequately today. All right, let's just bring up. All right, so let's just take a look at the. Great, Anna. Awesome. Okay, let's take a look at this. What have we said previously? What have we said previously? We've said watch this sort of 15,000 level here, because now, practically speaking, now we're going to chart analysis. Well, this is a level the market has certainly paid attention to in the past. For whatever reason, the market's saying 15,000 is important. Support. support, support, support. Every time we hit this level, market comes in, market buyers come in, support. Then something happens here. Then something happens here. But the buying power just isn't strong enough. Okay, the buyers get overwhelmed. So sellers take control, but now it's turned resistance. Remember, that, by the way, there's a name for it in technical analysis. It's called the principle of polarity. You'll see it all the time. Support becomes resistance. It's a principle of polarity. Again, there is reasoning behind it. We've done it before. I'm not going to get it into it today. It's just we're now at a key reaction level. Key reaction level. If I had to ask you guys, where do you think that the DAX is likely to react? Where do you think? Now, it's just a guess, because we can't say this for sure. There's no ways we can say this for sure. But if you had to say, Russ, I reckon 15,000 is probably a good level. The market's reacted off there previously. I'll say, I agree. So we're kind of there, right? We're kind of there. So it's becoming a very, very interesting market for us to keep our eye on. Now, take a look at the. It's Thursday. It's Thursday. We don't have a particularly large candle here. The actual emotional attachment to the DAX this week hasn't been sort of abnormally large. I mean, we've got big candles here, big candles here. This is not so big, but what you can see is that there is a selling tail. Okay, you can see a selling tail, and guess where that selling tail is taking place? Taking place at our 15,000. Well, it's not at 15,000, but it's kind of in the vicinity, right? So we just want to take note of this resistance level here. We also want to take note of what President Lagarde says today. It's going to, I think, have an effect on German bonds. I think German bonds are going to be reflected in the DAX. High risk data. Okay, so we go down to the we go through to the daily chart here. And now look what happens on the daily chart. We slip in. See that? So we've zoomed in. We're slipping. Now we know we're at a weekly key level. Okay, on the daily we're slipping. We've moved from zone 1 into zone 2. And not conclusively. We'll only know at the end of today whether we're really in zone 2, because actually I'm not quite correct on that, because we're looking at Heiken Ashes here, not Japanese candlesticks. Let's take a look at it. I'll come back to Heiken Ashes. Let's just take out the Heiken Ashes and and take a look at the, yeah. All right, I'm begging. We are in zone 2. We are in zone 2. On the Japanese candlesticks, we are in zone 2. So that's relative weakness. Okay, so we are effectively moved from a zone of strength into the neutral area. On a relative basis, we all know that's a step backwards. Let's bring the Heiken Ashes back in, because I think there is certainly something to say here. And you just type in HA. Heiken Ashes won't give you price. Don't look at Heiken Ashes if you are looking for accurate open, high, low closes. You're not going to get that on a Heiken Ashes. But what you will get is a trend following indicator. So it's much smoother. So blue, the color code on my charts, the blue is an uptrend, red is a downtrend. So we've just turned red. So it does look as if the Heiken Ashes reinforces the weakness from zone 1 to zone 2, which makes sense. Okay, it's basically just reiterating what we already know. The key is, or the question is, how many red candles do we get? The more red candles we get, the more vicious the slide. Again, if we get a blue candle and we come back into zone 1, fair enough, we're going to have to address that then. But as we look, examine the charts now, it's slipping. So that brings us to chart the hourly chart. And what's happening here is going to be difficult to time any. It's going to be difficult to time any sort of action based on what I see, because it looks like we're late. In other words, these the DAX started slipping over here. There is certainly a strong downwards momentum on the hourly, but I would wait to see. So we know that we're at resistance. We know that we're slipping on the daily. Well, now does the central pivot act as a key resistance? If it doesn't, does R1 act as a key resistance? Well, those might be levels that shorts. It may be levels that shorts are targeting. What's the complexity with that? We've got a central bank announcement. So, so just be very, very cognizant of that. Whatever analysis you arrive at, that could all be thrown out the window the moment the ECB releases. And of course, during the press conference, it's going to be potentially extremely wild. So just watch that. And as just saying, also keep an eye on the Bollinger's, looking to squeeze. All right, so that's the that's the DAX. All right, probably, in my opinion, probably the most important chart overall. So clearly today, I think the ECB is dominating, but I think overall, this chart to me is just a something that we cannot ignore, and that this is the 10-year and the US 10-year. And I think that this chart influences a lot of our is going to influence our decisions as traders. And we've got an uptrend here, higher trough, higher peak. It looks as if we've got a new higher trough in for the US 10-year. Okay, take a look at the momentum; it's still strong. Take a look at the RSI; we're not overbought. So the US 10-year here looks very ominous in terms of moving higher. I think that there is certainly a chance of moving higher. Now, as we explained yesterday, the reason that I think that there is a very good chance of yield moving higher is not necessarily with regard to the Fed's hiking or being aggressive with its hike or being less aggressive with its hikes. It's now all about siphoning liquidity out of the market. And I want to put an emphasis on that because I don't think there is an emphasis on that. It's a huge unknown. It may actually be less important than I think, but it's a huge unknown. And on a sensibility basis, it seems that it's going to support interest rates. So we want to keep an eye on this chart. Okay. This is kind of where the adjustment taking place. So we want to keep an eye on this. I just got a message here from Rob. A few minor things. First of all, Anna, Rob, thanks you very much for the crypto video. It was a very good watch. Any thoughts on the natural gas drop due to the fire? Should this normalize? We'll take a look at that. I'll add that to the list. Natural gas. On the 4-hour chart, you had an indicator. Which one was that? 4-hour chart. 4-hour chart. From yesterday? Let me see. This one over here, this RSI. Is that I can't quite remember, Rob. I tend to use RSIs and stochastic. Your 4. I used something on the weekly chart called the COPOC. Is that something is that what you're referring to, or you definitely referring to the 4-hour? This one. I think it's the RSI, Rob. Subject to correction. I think we may have to let's do this. Can we discuss this over email? I think it's the RSI. I tend to look at RSI, stochastic. It's a set of 12 charts. Oh, wait a second. I see what you're saying. I beg your pardon. Okay. I'm begging your pardon. I understand. Okay. You're looking at this. Okay. So the question is, what's the this black line here? This is actually part of the Ishimoku. It is this thing called the Kijun Sen. In fact, Rob, send me an email. I can't remember when we did it. It was last year. We did actually quite a cool series on Ichimoku. I'm happy to send you the links, and if anybody wants that, will just send me an email. But it's quite. I like the. It's called the Kijun Sen. Okay, so send me an email. I'll shoot you the. I'll shoot you the course. I think we covered it over 2 or 3 weeks. I can't quite remember. All right. Let's pop that one down. Yes. Okay. So Anna's now preempting. So we're going from the 10-year. I want to look at the US dollar. We must look at the US dollar now. And let's just see. Katie's got a question here. Hold on. Katie wants to look at cotton. It's not one that I look at all that often. I'm happy to look at it, Katie. We'll do it at the end. Just can you send me the ticker code, the one that you sort of look at, and I'll type it in at the end. So if you just send me the ticker code, I'm happy to take a look at it. All right. Let's go to the US dollar. So I'm just going to add. So what have we got? Your natural gas and cotton. Okay. All right. Let's go to the US dollar. All right, so again, I think a really important chart for us to look at, because if there is liquidity that's been siphoned out of the market, then we want to take a look at what is becoming effectively a more rare instrument, a rarer instrument, right? Which would be the dollar, because there'd be less dollars in circulation. But if there's less dollars in circulation, conventional wisdom would suggest it's going to become more valuable, right? In that regard, it very much depends on that discounting factor again, but we want to keep an eye on stochastic. It's still looking very, very strong. This higher trough here, this is what I want to show you guys. We've got today and we've got tomorrow. The key is, where does this end tomorrow? There is huge scope for change here because we're going to get the inflation data out tomorrow. But right now, it's fitting our definition of a higher trough. It's got the lowest low in at least 3 candles. It's, well, I'm assuming this is low 12,607. Yeah, it does. Okay, so it fits our definition. Here's the lowest low. Here is a higher low. Here's a high low. It's taken out the reference candles high, and it looks to be currently above that reference candles high. It needs to close above the reference candles high. So, and we'll only know that. We'll only know that tomorrow, right? But it does look as if we're getting this higher trough in. In other words, the proverbial dip in the uptrend. Okay, if that's the case, just like the DAX is starting to slip, dollar's starting to gain. Here is the movement from zone 3 into zone 2. Okay, now any sort of pullback here, I think, becomes interesting. Okay, so is the central pivot going to hold their support? Is the S1 going to hold their support? If it does, we want to look at the triggers, and if the triggers push toward, if the triggers then result in a upwards momentum. So, okay, Katie, got it. I'll take a look at that. So the US dollar there does look to be moving. Now, if the US dollar is moving, what's so important about this is because if the US dollar is moving, the others must be moving too. So let's go through to euro. which is clearly going to be in focus today. Again, just be cautious because, why must we be cautious? ECB meeting, right? It slipped from zone 1, it's gone into zone 2. These are Heiken-Ashi's blue here, but we want to just keep an eye on this on a weekly basis. Okay, the trend, lower peak, lower trough, lower peak, lower trough, lower peak, question mark. If so, well, this is probably a good level to be looking to see if it's shortable. Okay, especially with the dollar becoming a scarcer instrument, right? So I want to keep an eye on this. Not only do, by the way, if you short euro US dollar, you're going to earn interest. Don't forget that. So that's always something that I think is worth considering. Take a look at the trigger 1, trigger 2. Okay, where's the momentum? It's heading down. So this looks actually pretty good to me in terms of a potential short. What's the big bugbear here? ECB meeting. There's no ways I'm going to put money on this. I don't think it's going to move before the ECB meeting, not significantly. And the ECB meeting is going to put this thing all over the show. So, but this is kind of a setup that I would be very interested in on any other day. And we would let's take a look at cable. Okay. Cable, peaks and troughs. Peaks and troughs. What we're looking for here, what this looks like. Hello, peak here. Okay. Daily chart. Well, we're slipping. We're slipping. Zone 1 into zone 2. This time the Heiken-Ashi is red. Okay. What about the hourly? Well, it's been very shallow. So there hasn't been much. There hasn't been much of a swing here. But if we develop angle and separation, and if we get the stochastic into that lower quintile, okay, then there could be something happening here. I want to just reiterate that this could be, I want to put in my watermark, this could be let's just assume that we do get the angle and separation. Let's just assume that we do get the stochastic moving into that lower quintile. Tomorrow is important. That US CPI number is going to also be, I think, quite catalytic in terms of moving the US dollar. So just be aware of that. All right, what I'll do here, just to end off, let's take a look at natural gas and cotton. I think any which way we look at natural gas here, I think it's going to fall into the supply shock category. So if it falls into the supply shock category, any sort of dips here, and again, I'm going to say subject to correction, are probably something that is worth just keeping an eye. Natural gas also has quite a horrendous reputation as a instrument. It can, I think it's hurt a lot of traders out there. So I think it's just worth mentioning. If you're trading this, trade it according to your trading plan. So yes, there's a huge drop here. I think that let's take a look at the daily chart then gives us a little bit more granularity. Does this level hold? Let's perhaps extend this. And we can actually extend it to here. So you can see we're kind of at a key level here, Rod. I'm quite uncomfortable sort of with the fundamentals of natural gas. I've got to do more research, but I would suggest, as a technical analyst, this looks like a fairly useful level to monitor. That in of itself is not good enough. I would then go down to the hourlies. Then I would go down to hourlies and then it would we would want to get our trigger 1, trigger 2, and then see if the momentum goes. I feel that I haven't done the instrument enough justice there, Rob, but I've probably kind of taken it as far as I can go. I'll look into it with and see if I can sort of glean more information. But if there's any other questions, definitely you must just let me know. What is the general location of the Henry Hub, or is this global gas? I think this is again, and I'm going to say this is a proxy for natural gas globally. Okay, but I'm happy just to confirm that. My impression is that this is a proxy for global prices. I'm going to attach my subject to correction phrase on here. So I'm begging your pardon. Does that help at all? I hope it does. I'm going to take a look at cotton, which I'm in certainly I'm at a disadvantage here, Katie. You must understand. I've never really looked at cotton. I don't think on any serious basis. Certainly, never traded it. So please keep that in mind. Let me just take a look. CTN2. And so you can't buy 100% cotton clothes. All right, let's see what the technicals say here. So okay, so we can just kind of put in these, and I think it's also a good time just to reiterate. I think that if you are using technicals to trade, you know, if you can line this up with fundamentals, I think you're always going to be in a better position, which again puts this analysis, I think, at a disadvantage. So please please understand that, KD. But so purely as a technician, you can see that we've got a higher trough followed by a higher peak, followed by the higher trough, followed by the higher peak. And it's saying that natural gas is the actual global price. Okay, so there we go. Yeah, I thought it would be just from previous times we've tackled natural gas, that does seem to be the price. Okay, but I think that the lack of my personal understanding of the fundamentals there must be acknowledged. Okay, we've got the higher trough, higher peak, higher trough, higher peak. That is a technical uptrend. Take a look at the momentum here. Okay, the momentum here is very strong. It is slipping a bit there, KD, so you have to be aware of that. No real excess. No real excess. Let's just go down to the daily here. And what I'd like to do here on the daily is let's just use our zone analysis as well. So the zones are going to be Bollinger Bands. So we put in 2 Bollinger Bands. And let's just adjust these so we have the correct settings. The first one we're going to put in is a 20.75. Okay. And I'm going to change that to just a sort of a more navy blue. We don't need the basis, we don't need the background. Let's get rid of that. Okay, let's just adjust the next one. The next one here, we're going to leave it as 22. We're going to take out the basis, we're going to take out the background. I'm going to make these red. And what you can see here is, let's take these out. What you can see here, KD, I think is a movement from that zone 3 into that zone 2. So there does seem to be some sort of support, some sort of bid coming in. What we can do is add in the Heiken Ashi just to get a second feel for trend. Okay, so the Heiken Ashis are blue as well. So if they move towards zone 1, I think that would be bullish. Take a look at your stochastics. Stochastics rolling up. It really needs to get here for any meaningful swing. One would think, right? Yeah, there's no doubt that it's been trending up. We certainly can see it's been trending up. Yeah, you just put in your peaks and troughs. There's no ways we could argue against this being an uptrend. Even on the weekly basis, we're in zone 1 here. Again, the fundamentals here would come down, Katie, to supply versus demand of cotton. It's not an industry that I am knowledgeable in. So I want to just make that point. So we're going to try and have to figure out, is there an excess demand fundamentally, or if there's an excess supply? I don't know. Technically speaking, it looks, of course, that there is it does look as if there is a excess demand on a weekly basis. It does look like there's some sort of dip in the uptrend, which is always something that would be of interest to us. So the technicals are looking pretty good. We need to know a little bit more about this. You know, if we're going to actually commit some sort of capital to it, I think we need to try and get some more information in terms of the underlying drivers. I'm going to probably stop there. I'll see if I can find out some information on natural gas and cotton, and just sort of school myself up on if there's any excess demand or supply. Does that? I hope that helps, Katie. Okay. Any other questions there, guys? All right. I think let's wrap up here then. Have a good day, good evening, and we shall chat again tomorrow morning. Thanks very much, guys, and speak to you all soon.